So good morning, active traders, and welcome to our Trading Week Ahead broadcast coming at you live here on Saturday, April 3rd, 2021. As always, all information is for educational use only. I'm not making advice about what to buy, sell, or hold, yada, yada, yada. You may have seen me at the Money Show Traders Expos as a featured speaker, including this was 3 or 4 years ago. Back with me as a younger man with the suit and tie and everything. And we brought to you by our Trade Mastery live trading open room. We have live classes 5 times a week, Monday through Friday, for active traders. So let's go ahead and get this party started and see what's going on. S&P finally broke 4,000. Hooray! It's a historic moment, right? All-time record new high was hit just on Thursday, and you can see the market did rally on up to new highs. We got obvious support at the 50 SMA at 3,900, and obvious resistance would be around 40.20 or so. So we're in a little directional uptrend here, and no reason to expect the market will slow down anytime soon. Similarly, you can see the VIX, not only did it lose 20, which it had been doing the last couple of weeks, but it even lost 19 come Thursday. And this is the first time the VIX has been under 19 in many months. So it's been a big drop in the VIX. One contrarian way to play that is what I like to do is I had picked up a few hundred shares of UVXY, because surely at some point the VIX will spike back up, right? That's the nature of the beast. The CBOE Volatility Index, also known as the VIX, cycles up and down, and you want to play it at extremes. You buy the dip, you sell the rip. When it looks horrible and it's crashing, that's the exact right time to buy, and then you sell into the breakout. When it looks horrible, it's crashing, that's the right time to buy. You buy low, sell high. Now, normally, I'm a world's top expert in breakout trading. I like to teach how to buy high, sell higher. That's how you normally trade stocks, but for inverse instruments, it's the opposite. Anyway, really good plays in our current market. We're going to take a look at reopening plays. The first thing to keep in mind is that with the economy reopening and people going back to outside activities, outside their house and all that, we've got strength in your casino, your airline, your cruise ship, and your restaurant sectors, 4 sectors. So that's the reopening play, is things that people do outside: restaurants, casinos, gambling, and cruise ships. So that's one group of growth to be on the lookout for. And you can take a look at a few of the charts here to illustrate that. You can see here is Southwest Airlines, ticker LOVE, LUV. Gotta love that ticker, and it's been in an uptick for quite some time. Definitely a good play if it breaks to new highs north of 63 a share. My favorite gaming or casino stock is MGM, and you can see it's also been in a nice 45-degree angle uptrend for 6 months, right? So it's been going up nicely, and no reason to think it'll slow down. In fact, I'm a little bullish engulfing here off this recent pullback high. So good relative strength in MGM. So that's one group of what to pay attention to, is the reopening plays for what people do when they go outside, okay? The other is the infrastructure, and that favors things like raw materials like steel and concrete and wood. If Biden's spending trillions of dollars rebuilding, or admittedly they need it, I think, and now's probably a really good time to do that. So I do support the idea of putting money into bridges and freeways and highways. All the raw materials for all those potholes being patched and all those bridges being fixed is going into private industry, right? So that's why we see strength in instruments like my favorite steel stock, steel, heart of steel, US Steel. My favorite steel stock, X. It's gone from $8 a share to 26 a share. Not too bad of a return on investment for US Steel traders. And the other one that I heard, this is one that I had heard Jim Cramer had mentioned it last week too, CLF, Cliffs, and this one had gone skyrocketing from 8 to 20. So this is one of my favorite charts of the upcoming week or two ahead, if it gets over the nearest whole number. Now, one thing that you'll learn about as a live room member is how to trade both swing and day trading. And we're starting off right now with swing trades, but maybe 70–80% of our focus in the live trading room is day trades. But we cover both. One of the core strategies you'll learn about is how to trade above whole numbers and sell in real time right under the nearest toll number. So for round trip day trades, if you buy, say, $21.10 a share, I'd be fine to sell it at $21.90 a share right under the nearest toll number. For swing trades, of course, we want to go for quite a few more points, and we teach how to do that as well in the live room. So another featured benefit of being a live room member. Join now. Operators are standing by. Anyway, so we've got U.S. Steel and Cliff. Oil has been, that's steel. Oil's been strong too, and you can see Marathon Oil. One of my traders, one of you folks had mentioned this one last week, I believe it was. Anyway, it's been a spectacular runner all the way from 4 to 12. It's tripled in value. So oil's been especially strong. Other favorite oil play that we cover in the live room is Occidental Petroleum, OXY. That's another one of my longtime favorite oil sector plays. So OXY and Marathon are two really good ones. Another sector of note is Bitcoin. You may have heard of Bitcoin. I still have a hard time understanding Bitcoin. To me, it's all a bunch of random electrons out there, and so I'm not going to trade Bitcoin, but I do trade things in that sector, like MARA is a Bitcoin play. This was one of our biggest winning alerts. I think it was the biggest winner for our members in chat room last week was MARA. I called it long for everybody both Wednesday and Thursday, and it skyrocketed up multiple points on both days. So this is a stock that goes up when Bitcoin goes up, MARA. Another one is Riot, RIOT. A little pricey for my taste, but it's a good one. And another one is EBON, Echo Bravo Oscar November. So anyway, and we'll look at some day trading charts momentarily, but I thought we'd start off with some swings because you want to hit home runs with charts that have big point runs. So this is a good one. Also, Trader Kennan mentioned lumber had gone up, and if you look at the CUT chart, especially on the 1 year, what a run, right? Perfect run in CUT, a lumber sector stock. So we've got plenty of volatility in these instruments. So what you want to do as a trader is focus on kind of a hybrid day and swing trading approach. Wow, a huge turnout today. Can you folks let me know right now if you're, the answer is usually both, but if you're one or the other, are you a day trader? Are you mostly a day trader? Are you mostly a swing trader? Or you split your energy like I do with both? I'll day trade, and if it ends doing well on the day, I'll leave some shares overnight for a swing trade to feed a winning swing trade. If it just goes up, pop and drops and starts to pull back down, I sell it all and take the money and run. But if you would type in right now, are you a day trader, swing trader, or both? Type in the word day, swing, or both, and I'll cover more charts based on what the majority of you tell me. Hey, Darby, Ebon's a Bitcoin play. Thanks, Darby, Chris, Frenchie, Mira, Peter, Ed, Alan, Bryce, Damon, Walter, Bill, Ben, Steve, Sam, Chillin, Alan, Walter, Bill, Wendy, Ned, Steve. Looks like we're headed heavily towards swing trading. It's interesting. Looks about, I used to be a corporate statistician for Ford Motor Company, so I can eyeball data, and it looked about 40% swing, 60% both so far. Yeah, whatever's making money. Good answer, GB. I appreciate it. Hey, Margaret, saying I'm a swing trader, but interested in also doing day trading. Yeah, the one thing about day trading is you do not want to trade low float, cheap, under $10 pop and drop stocks with lots of shares. That's going to blow up your account. Pretty much guaranteed to blow up your account. What you want is steady, consistent breakouts. And those are usually in the like $10 or $15 up to $30 a share are the ones that I like to cover. But yeah, good point. Both swings and both. Okay, good to hear it, folks. So it's good we started off with swing trades. That's a good sector or a good time frame to look at. Well, then the trader mentioned earlier this morning for a cannabis ETF is MSOS. That's a fine looking chart. When it bounces, it's trying to bounce here, so keep an eye on MSOS. And the one that I'm trading right now is MJ. Another cannabis sector ETF. And you can see I have a hammer right here, right? It's a hammer, and price went up right after that. Then it pulled back, and it's still in play though. It's still a good play unless it loses the hammer low down to 20-ish. All right, so what else do we have to look at? Let's look at some more charts. Then we'll switch gears to day trading momentarily. So we covered those. Someone had asked about gold. That's as good a reason as any to flip to an intraday chart. And since markets were closed on Friday, I'm going to change this to a 3-day chart. Normally we use a 2-day chart in the live room. But this is the story of gold. It's sparkling, it's shining bright, right? GDX, my favorite instrument for trading gold, did nice. I called along for my members at 32.20 on Wednesday. Now it's all up at 33.6. But a nice 45-degree angle day-over-day breakout, right? 45-degree angle breakouts are the strongest breakouts, right? And those are really good charts. You can see GDX is especially strong here on Wednesday and Thursday. Again, markets are closed yesterday, so there's a big blank spot here for yesterday. Other charts with good volatility include UPC from yesterday. Now, this is an example of the kind of chart to not start your day trading career off with. I'm the founder of the original and best Day Trading University from 1999. And I tell you from 21 years experience, there's a lot of kids out there pretending to make money trading these cheap stocks on a lot of volume. It's a show and it's not authentic. As a general rule of thumb, you don't want to trade things that skyrocket up and get halted and gap back down again and crash and burn. That's a dangerous, horrible way to day trade. You don't want to trade stocks like this one. I prefer charts like this that go up for a more steady run, like CAN. You can see my whole number strategy, and I mentioned this a little while ago, is we go long right above a whole number, like say 22.20 or so, right? Actually, I should move this down. Well, I'm trying to move this chart. Anyway, the point is, you go long right above a whole number. In this case, like 22.20. The yellow line should be at 22. I was trying to illustrate the whole number. You go long and say right above the whole number, and then you sell, or at least tighten up a trailing stop under the nearest whole number. You can lather, rinse, repeat, right? Same exact strategy. Does everyone understand that? You may have seen my award-winning articles in technical analysis of stocks and commodities magazine at traders.com. And in that, one of my many articles, a very popular one, is this whole number strategy, where you go in right above a whole number and at least tighten in a trailing stop. If I tell my new traders, ring the register, go to cash, sell, 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 right under a whole number, because often that's a reversal time. So if you buy at, say, 22.20, you sell at 22.80, game over, and that's fine. You made 60 cents on the trade. And then you repeat if it goes above the next whole number, so you don't have this fear of missing out. Like, but what if it goes to 28? I'm going to miss out on all that run. No, you won't, because you play within the nearest whole number. And I walk traders step by step through how to do that in the live room. And that's one of the many core strategies that is uniquely mine that I teach traders how to do 5 days a week. And it's very popular, and that's why my room is so popular. Is I give specific entries and real-time calls on both entries and exits. As to where to pull the trigger now for a long to buy, and then where to sell it right now, kind of thing, or if it gets under a key area. So anyway, that's the whole number strategy. Mara had been really good Wednesday and Thursday. Here you can see Thursday's cut pattern breakout. You'll often find cup resistance or ascending triangle or other common trading 101 type pattern resistance at whole numbers. Now, you avoid false breakouts by setting a trigger at a place where the crowd doesn't trade, and I teach how to do that in the live room. It's another exclusive benefit with specific triggers called out ahead of time. But anyway, this is a really good cut pattern. You can see like the letter W, right? Anyway, the letter W, and you go along right above that, especially if it's right at a whole number, which it is, right at 45, right? It ran all the way to 48 before a pullback. So this is a winning alert. I called for my member. I think we'd called it even earlier back down. I think we'd called it something like 43.30 out near the 45. So that was a whole number run there. And then again, it ran up later in the day as well. So anyway, this is an example of a chart with multiple points of range that makes sense to trade. So that's a good example, good chart. There's that can chart, and Marathon was a nice big winner for us on Thursday. One of my smart traders had asked about it on its way up, and we didn't catch it in time for the first run up because the trader had asked me about it up here. I said we play the mean reversion pivot, and that's the example of a pattern where you have a run up, a pullback to the mean, around 50%. And then, so this is how to trade, and I teach how to do this in the live room. This is how to trade if you miss the big run up because you're off trading something else. That was our case, right? I was trading other instruments and recovering other charts. So we missed the first big run, but never fear, Ken is here. If you have a pullback, the trick is you don't play a very small pullback. It's best if it's a full 50% retracement, particularly if it's near a whole number, which this was right near the $11 share mark. So pull back to 11.15. So the pivot long looks to be there, and it ran all the way up to just under the nearest whole number, right under 12. This also illustrates my whole idea of selling nines, right? We like to sell anything with a 0.9 in it. So even if you miss the first big run, if you know how to trade and if you know exactly what to look for, it's often a really good trade to take the second sign of strength while sitting out the pullback or the chop or the consolidation following the first big run up. So those are the kind of charts we cover. Hey, Damon. Yeah, right, Walter. Yeah, avoid the pop and drop the cheap stocks. Anyway, so that's kind of about what I had to say for today. Let's see if there's anything else. Let's blaze through some of these. This is what I mean by, yeah, the stock market rallied, but a lot of stocks didn't, right? This is our core follow-up list. And I'm not going to click through all of these, but you can see, you know, growth, high-tech stocks like Tesla, not doing too great. Solars had been up earlier in the week, but giving some back. GameStop is still plugging away up here. Now, good luck trading this, right? This would be very difficult to either day or swing trade because the ranges are compressed and it's choppy. I prefer charts with a clean directional run, like Apache or Marathon Oil, both really strong lately. This is that other Bitcoin stock I was telling you guys about, EBON. Now it fell off a cliff Thursday morning, right? It went all the way from 8 down to 6 and change. Did a little dead cat bounce. Bad kitty. Bit sideways. So leave that one alone. At least I am. UVXY has gotten hammered all the way down to $5 a share. I can't believe UVXY. Look at the large closing volume. It's kind of a trick of the trade is like a poker tell. Look to see the closing minute worth of volume or so if it's an especially large volume bar, and this was the case on both Wednesday and Thursday. There's a lot of buyers in this both Wednesday and Thursday, so for that reason I'm keen to play a pivot in UVXY. That's the way to play the volatility if and when the VIX ever comes back to life. But anyway, my main point is like 2/3 of the tickers are red and only 1/3 are green, despite the fact that the market itself was up, which tells us we've got relative strength in different instruments. Okay, let's get back to our swing trading charts and we'll wrap up for today. Anyway, and Philip Morris still looks for Altria now. Still pretty good despite a little bit of a pullback the last couple of days. Mo still looks great if he breaks over 53. So anyway, I think that's going to wrap us up for today's broadcast. I don't have anything else to say, so I'm not going to stick around and lollygag around. Our time is all valuable. I wanted to extend my thanks to all of you for being here. I wanted to wish you the very best for a happy Easter for you and yours, and stay safe. Have a peaceful and relaxing weekend, and hopefully a profitable trading week ahead. So let me know if any other last questions. If not, I think we're going to wrap. Oh, thanks, Wendy, too. Happy Easter. Thanks, Walt, saying Tesla reported high delivery Friday, right? Well, thanks. Trader saying thanks to the Metastock webinars link. I'm registered to attend. Yeah, I'll be speaking on, looks like 2 p.m. That's either my time or East Coast time, but I will be speaking Tuesday afternoon for Metastock. So I think it's 4 p.m. I'm speaking. Hey, happy Easter to you too, Margaret, Peter, Ben, Will, Damon. Hey, you too. Yes, take care. And I hope this has been of help, right? The main takeaway is pay attention to specific sectors because it's these verticals that are getting kind of like business verticals, right? Whether it's production or engineering or admin or whatever, you've got sectors or industry groups that are experiencing exceptional growth at the expense of others. It's like money comes out of high growth, tech and into reopening plays, right? So it's a shift of money with money managers because like anyone will tell you, they're always looking at where's the next big move up going to be. So, last year, and I know one of the talking heads, he was booyah talking about this is very correctly. So, this is a different year than last year. Last year was a year of technology, right? Because of the coronavirus and people having to stay at home. So your Zooms and all the and Adobe and all the high tech growth, the FANG stocks and whatnot, those are doing especially well last year, but that was then, this is now. Now we're in a reopening phase. And so raw materials for building bridges and highways, things like steel, concrete, wood, all that kind of stuff, that's likely to continue to be strong, as are the things like the casino gaming. I keep using those as different words. The casino / gaming, hotel, cruise lines and restaurant sectors are likely to see continued growth as well. So signing off from Colorado Springs, I'm Ken Calhoun. I wanted to wish you all the best for a spectacular week ahead. Hopefully be on the right side of things. One thing too, just a quick parting thought, you might want to bring questions about maybe your favorite tickers or questions for day or swing trading charts to the live room sessions all next week, right? Or any of the days next week and the weeks and the months beyond, because I like to answer trader questions as well as giving everybody a watch list of maybe 7 or so stocks with specific entry triggers before the bell, and then we follow up with updated, the second entry would be here and the exit would be there. And here's how to manage your trades from start to finish. So thank you for joining me here on a Saturday. Have a happy Easter, and I will see you all to be continued same time next week. Trade smart, join the live room, and I will see you guys